All right, my trading friends, it's Thursday, December 17th. I hope wherever you are, you're warm. We have a day where we're actually going to sell some premium. It's fantastic, or at least we're going to look at it at this opportunity, and you can decide for yourself, of course, if this is a trade you'd like to put on in your portfolio. Today's cherry bomb comes from, of course, Tasty Trade. It involves the VIX, and which has a liquidity rank of 3 out of 4 and an IV rank right now of about 18. So if you're looking to bullish on the VIX, that means you're bearish on the market. If you're looking to add a little short delta to your portfolio, then today's trade might help you with that. So let's hop on into ThinkOrSwim and get started. But of course, I like to introduce myself briefly in the beginning and let you know what we do here. My name is Neil, and of course, this is Option Theory, and I very much appreciate that you clicked on this video to watch it, whether or not you are a returning subscriber or you're new to this channel. What we do here is build out a portfolio using cherry bomb trades that come from Tasty Trade. The link is in the description below to go sign up with Tasty Trade, not with me, just a bit.ly link so I can see how often it gets clicked. And that's it. That's what we do here. So we invite you to join us and practice along with us so that you can take the fear out of trading in a safe environment before you maybe move to your own real portfolio. So to do that, hit that subscribe button and ring that bell. That way you can put the trades on when we put the trades on. All right. With that said, let's go ahead. You can see our portfolio is on the screen right now. We're going to be adding an undefined risk trade right here. So we happen to have a strangle on right here in MJ, the ETF that tracks the cannabis industry. And that's the only undefined risk trade that we have right now. And we've been doing lots and lots of debit spreads. You just saw me closing up. I'm going to try to roll up I'm rolling up the put side on my Qs so that I can take some more risk. This one looks like it's going to be a loser, so I'm reducing the amount of loss I can take here, probably by half, so that's good. All right, now let's do the Analyze tab. Let's go to Add Simulated Trade. You're going to type in VIX here into the ticker box, and you're going to go to the January 20th expirations. The email that we get from Tasty Trade, or that we received from Tasty Trade, tells us that we're going to sell the 20 call, or at least we're going to look at it, right? Never have to do what these trades say. So selling, did I say call? Sure hope I said put, but selling the 20 put. I might have said call because I saw the C. Yeah, I don't know. All right, so 20 put, which is got a relatively wide bid-ask spread. I don't know if that's a function of the market being closed right now, but plenty of open interest in it. So, you should be able to go ahead and click this bid. It's going to be 70. So right now I'll put it, I'll put 75 for a mid price here. And that's what, nope, 20 cent wide. Go with 80. Let's go, that's a mid price for sure. And yeah, so there we are with this one, looking at collecting 80 cents on this trade. Now, you may not like the idea of naked options, and I can totally appreciate that. Though, if I had to go, naked, it would be with puts, right? Because what are you saying? You're saying, hey, I'd be happy to pay less for this than you can buy it for right now, and you're gonna pay me to do that, right? And then you might end up going long shares. But of course, you can't go long shares in VIX, right? It's cash settled, I believe. So you're not going to go long shares of VIX. So let's understand our probabilities. Now that we've got this, just our trade is built. It's one contract here. Make sure yours, and once again, my mouse is not there. I'm going to remember this one of these days. There it is. One contract down here. Is all we have. Yours may be 10. Adjust your position size accordingly to your risk tolerance. Now, I'm going to go over here to risk profile, speaking of risk, and take a look at that. We're going to dial in our expiration, which is January 20th, right there. And we're going to shrink this down so we can see the expected move on the screen. There we are. And we're going to move our slices to break even at expiration. So we're staring at let's call it a 69% probability of ending up on this price slice or to the right. So we'll call that a 69% probability of profit, 30% probability of losing money on this trade, right? So if we lose, it is, air quotes, infinite risk. However, should there be absolutely no volatility in the market, no fear in the market, and it goes to nothing, you would lose $1,920, right? So you could do that all the way over here, down to zero, and we're looking at 1,900. And it would be 20. I don't know why I can't get down there. All right, so that's what we're looking at. Now, I'm cool with that trade, but I want to take a look in Tastyworks so we can see a alternate version of this trade. And I should have, and I always do this, so shame on me. Click over here, and it's not there. And then I do that, and it's there. Yay. Okay, so here we are. We're in Tastyworks, and we've got the same trade pulled up. It's saying a 60% probability profit versus 69 that we see in ThinkOrSwim. But the metric that's interesting, and I like to come here for, is the P50. So there's an 86% probability of taking off the $40 somewhere in the next 33 days, right? Because that's what we're looking at right here, days to expiration. Now, if you're the kind of person that does not want to put in undefined risk trade into their portfolio, whether it's simulated trading, paper trading, or not, right? Then I can appreciate that. So we're going to take a look at an alternative trade. Though you should know, if you're trading in an IRA, naked puts are totally fine. Naked calls, not so much, depending on your brokerage. But what you can do is say, look, I don't really want to risk this much. $2,000 is a little bit rich for me. You can make this a vertical, right? And by going far and making it wide enough, you're essentially simulating a naked put and taking a lot of the risk off the table. So let's make this a $5 wide short put vertical and see what we get. Watch these changes here in probability of profit and P50. We go 60 and 86, and I'm going to click on the 15 ask here so we can go ahead and buy to protect ourselves. So the most we could lose is the width minus the credit. So instead of taking a $80 max profit, now we go to 75, not that big of a change. And we went from 60 to 81. Let me delete this leg. So we're at 60% probability of profit and a P50 of 81. I'm going to delete this leg and 86. So to me, this makes a lot more sense. And look at the difference in risk. Instead of $2,000 of risk, we're risking $425 of risk should this move against us. And what are the chances of VIX coming down and hitting that 20, right? Testing our strikes? Well, whether or not it's ThinkOrSwim or Tastyworks, you can change, and I'll prove it to you that it's in Tastyworks as well. I'm sorry, not Tastyworks, ThinkOrSwim, because that's probably what most of you have. Let's go over here and switch back to that. If we go back over to add simulated trade, instead of having the open interest that I have, you can come over to base price and quotes and go to, maybe that's not it. There it is. It's option theoreticals and Greeks, and we come to probability of touching. So now we can see that there's a 75% probability that in the next 33 days, the VIX price will touch 20. So, and I get it. And I can appreciate why you may not like that, but you can see how far down you have to go to get, well, what's the probability of touch you're looking to get? It's always that balance between risk and reward, right? So this is a number that I'm okay with, but I think I'm going to do this as that $5 wide vertical. So I'm going to hold down the control key, click on the 15, and uncheck this lock so it'll give me the $75 credit and say, yay, there it is. All right, go back to the risk profile and change this. See what kind of crazy change we get when we change our probabilities. Yep, so so slightly less probability of profit on this one. So you can sleep at night knowing you're not going to lose $2,000, and you still have a 60, that's almost 69% probability profit on this one. All right, everybody, I'm going to right-click this trade, choose Confirm and Send. We're at that Confirm and Send phase of our video where we can see we can make $75, and we know an 81% probability of taking half of that off in the next 33 days, and a maximum loss of 425, which I know is not an exciting thing to look at, but, we know this going in. It's defined risk. It makes it a little harder to manage. So for those of you that decide to go with a naked put, I'd love to hear from you down below, and we'll see what happens if we get tested. That's why it's great in simulated trading. You can practice your rolling and your management. All right, I'm gonna go ahead and hit send. That puts it over in my working orders. And yeah, if you've made it this far into this video, this is where I give you your thumbs up. I appreciate when you watch most of my videos, right? I know you tend to dip out at a certain point, and that's okay. I totally get that. But I do want to give you your thumbs up. If you feel I've earned a thumbs up, and would you mind hitting that thumbs up down below? It does help me. It does. I do appreciate everything that you do. Just being here is wonderful. Thank you. Until I see you in tomorrow's final cherry bomb trade of the week, everybody, happy trading.